Samsung just dropped a technological bomb that could send physical silver to $171 per ounce, while the paper spot price sits frozen at $64, and almost nobody in the mainstream financial media is covering this yet. We're talking about a breakthrough in solid-state battery technology that completely changes the chemistry of the global energy transition, and the one metal at the center of it all is silver. If you own physical silver, or you've been thinking about buying, what I'm about to show you in the next 13 minutes could be the most important market intelligence you see all year. Because while Wall Street was distracted by Friday's paper price action, Samsung SDI quietly confirmed something that could break the entire global silver supply chain. Stay with me, because this gets wild. Let me set the stage for what's happening. According to a detailed report published on the Burning platform on December 14, 2025, Samsung SDI has confirmed a breakthrough in solid-state battery technology that doesn't just use lithium like traditional batteries. It requires a silver-carbon anode to solve what's called the dendrite problem in electric vehicles. The report states that this shift moves silver from being classified as a precious metal to becoming a strategic energy metal immediately. And here's what makes this urgent. JM Bullion reported on December 16th that silver is currently trading at 63.28 per ounce, up over 106% in the past year alone. Multiple sources confirm that silver hit an all-time record high above 64 in mid-December 2025. But the physical market is showing signs of severe stress that the spot price is not reflecting yet. The gap between what you can actually buy silver for versus what the paper contracts say it's worth is widening, and Samsung's technology could be the catalyst that blows that gap wide open. Let me break down the 4 most explosive facts from these reports that even beginners need to understand, because this is where the math gets absolutely insane. First fact, Samsung's solid-state batteries require silver as a core component of the anode. According to the analysis on the Burning platform, this isn't optional. Silver solves the dendrite problem that has plagued battery technology for years. Dendrites are tiny metal whiskers that form inside batteries and cause short circuits and fires. Silver's unique electrical conductivity and chemical properties prevent dendrite formation in solid-state designs. This means every electric vehicle using this next-generation battery technology will need significantly more silver than current lithium-ion batteries, which use virtually none. Second fact, the projected demand increase is catastrophic for supply. The Burning platform report calculates that a shift to solid-state batteries could consume over 115 million ounces of new silver annually. To put that in perspective, that's more than the entire annual silver production of Peru, which is one of the world's largest silver-producing nations. And this demand would hit a market that already has what multiple sources confirm is a 1.1 billion ounce cumulative structural deficit built up over 5 consecutive years. JM Bullion's data shows silver is up 106.7% over the past year and 148.8% over 5 years. And that's before Samsung's battery technology goes into mass production. Third fact, the physical market is already showing extreme stress signals. While spot silver on COMEX trades at $63 to $64, reports indicate that physical premiums in stressed markets like Shanghai have spiked to 8 to 10 per ounce above spot. In India, during high demand periods, premiums have gone even higher. Retail premiums for popular coins like American Silver Eagles are running 15 to 30% over spot, which means you're paying $73 to $83 for a coin when spot says 64. The Burning platform report specifically points out that Friday's paper price drop to 61.50 was a distraction while Samsung was confirming their breakthrough. They call it a paper game versus a physics game, and they argue that physics always wins. Fourth fact, the $171 price target is based on physical market decoupling from paper. The theory here is that when real-world industrial demand from the EV and tech sectors explodes because of Samsung's battery technology, the price of actual deliverable physical silver will be forced dramatically higher to either incentivize new mining supply or ration the existing physical stock. The spot price, which is heavily influenced by paper contracts and futures on exchanges like COMEX, won't reflect this reality until the physical squeeze becomes undeniable. At that point, you'll have a 2-tier market, paper silver trading at one price and physical silver trading at a massive premium, potentially as high as $171 according to these projections. Here's the angle that's not being discussed anywhere else, and this is what makes this situation so explosive. The Burning platform report debunks what they call the recycling myth and explains why the geological wall prevents miners from ramping up supply in time. Silver isn't like copper or aluminum, where you can just open more mines when prices go up. Most silver, about 70%, comes as a byproduct from mining other metals like zinc, lead, copper, and gold. That means even if silver prices double or triple, You can't just increase silver production unless the economics work for mining those base metals. And even if you could, it takes 5 to 10 years to permit, finance, and build a new mine according to industry experts we've covered in previous videos. The recycling angle is equally brutal. While you can recycle silver from old electronics and jewelry, the quantities are nowhere near sufficient. The Burning Platform report points out that Samsung's batteries would lock silver into long-term use in vehicles that won't be recycled for 10 to 15 years. By the time those batteries come back to the market for recycling, we'll have already experienced a decade-long supply crisis. This isn't a temporary squeeze. This is a structural shift in how silver gets consumed, and the supply side cannot respond fast enough. If you're still watching right now and you're starting to see why this matters, do me a quick favor, smash that subscribe button so this channel keeps landing in your feed every single day. Most people who watch this deep into the video end up thanking themselves 6 months from now when they're way ahead of the curve. It takes 2 seconds, and it genuinely helps me keep bringing you this information before the mainstream picks it up. So what does all of this actually mean for your money and your physical silver stack heading into 2026? Let's talk real numbers. JM Bullion confirms silver is currently at $63.28 per ounce. If you own physical silver right now, you're already sitting on gains of over 106% in the past year. But if Samsung's solid-state battery technology goes into mass production and the physical market decouples from paper, as these reports predict, we're talking about a completely different price environment. The $171 target represents a 170% premium over current spot prices. Even if you think that number is aggressive and you cut it in half, that's still $117 per ounce for physical silver. Your 1-ounce coins that you bought for $30 2 years ago would be worth nearly $120. For investors looking at the broader implications, this isn't just about silver prices going up. This is about the fundamental transformation of silver from a precious metal, primarily driven by investment demand, into a strategic industrial commodity that's absolutely critical for the global energy transition. When that happens, governments start paying attention. Supply chains become national security issues. Export restrictions get implemented. We've already seen this happen with rare earth metals and lithium. Silver could be next. Now let me give you the counter-arguments, because you need to hear both sides. First, Samsung has not officially confirmed a $171 silver price target. That projection comes from independent analysts extrapolating the supply-demand math based on Samsung's technology. Samsung's official statements focus on battery performance, not commodity price predictions. Second, no mainstream financial news outlets like Bloomberg, Reuters, or the Wall Street Journal have verified this story yet. The Burning Platform report is from an alternative finance site, which means you need to verify the core technology claims independently before making major portfolio decisions. Third, even if Samsung's technology is real and goes into production, the timeline matters enormously. If mass adoption takes 5 to 10 years, the supply side might have more time to adjust than these projections assume. New mines could come online, recycling infrastructure could improve, or competing battery technologies that don't use silver could emerge. And finally, the paper-silver market on COMEX is massive, over $60 billion in open interest. Breaking that market and creating a sustained two-tier pricing system would require an unprecedented physical squeeze. It's possible, but it's not guaranteed. Here's what you can actually do with this information starting this week. First, if you want to own physical silver as insurance against this scenario playing out, JM Bullion shows current prices at $63.28 per ounce. You can buy American Silver Eagles, Canadian Maples, or generic rounds from dealers like JM Bullion, APMEX, or SD Bullion. Expect to pay premiums of $10 to $20 over spot for coins, which puts your all-in cost around $70 to $83 per ounce right now. Don't buy your entire position at once. Dollar cost average over weeks or months to manage volatility. Second, for investors who want exposure without dealing with physical storage, you can look at silver ETFs like SLV or PSLV. These track the spot price with low management fees around 0.5%. Just understand that if a true physical decoupling happens, ETFs that hold paper contracts might not capture the full upside that physical holders would see. Third, if you want leveraged exposure and you understand the risks, look at silver mining stocks. Companies producing silver as a primary product would benefit enormously if physical prices spike to $100 or $171. Just know that mining stocks are volatile and come with operational risks that physical metal doesn't have. And most importantly, do your own research on Samsung's solid-state battery technology. Look for official Samsung SDI press releases, peer-reviewed technical papers, and statements from battery industry analysts. Verify the chemistry claims about silver-carbon anodes independently before betting heavily on this thesis. Quick question. Drop a single word in the comments right now. Type physical if you think we're headed for a two-tier market with physical silver at a massive premium, or type paper if you think spot and physical will stay connected. I read every comment, and it tells me what content to make next. So let me know what you think. Let's bring this home. Samsung SDI has confirmed a breakthrough in solid-state battery technology that uses a silver-carbon anode as a core component. Independent analysis projects this could consume over 115 million ounces of new silver annually, more than Peru's entire production. The silver market already has a 1.1 billion ounce cumulative deficit from 5 consecutive years of supply shortfalls. Physical silver is currently trading at $63.28 per ounce, up 106% in the past year. Analysts are projecting that if Samsung's technology goes into mass production, physical silver could decouple from paper spot prices and trade as high as $171 per ounce to ration limited supply. The burning platform, JM Bullion historical data, and multiple sources confirm the structural supply deficit and record price levels we're seeing right now. This is not financial advice. This is market intelligence you need to verify yourself. But if even half of this thesis plays out, the people who positioned themselves in physical silver before the mainstream catches on are going to look like geniuses. If you want to keep getting this kind of deep dive analysis before everyone else sees it, smash that subscribe button and hit the notification bell right now. And if this video gave you a completely new perspective on why silver might be the most undervalued strategic metal on the planet, hit that like button so this reaches more people. I'll see you in the comments, I'll see you in the next video, and until then, stay sharp, do your research, and make informed decisions. I'll talk to you soon.